Ladies and gentlemen, a seismic shift is rippling through the cryptocurrency markets right now. After weeks of uncertainty and consolidation, Bitcoin has unleashed a powerful shockwave, with bulls firmly seizing control as the broader crypto landscape turns decisively green once again. This is not just another fleeting rally, it signals a potential regime change in market structure that investors have been anticipating for months. Welcome to this in-depth update from Crypto Hub, your trusted source for timely, data-driven insights into the evolving world of digital assets. I'm here to break down exactly what's happening, why it matters, and what it could mean for the weeks and months ahead. In recent sessions, Bitcoin has demonstrated remarkable resilience, climbing back toward the $80,000 to $82,000 zone after rebounding strongly from recent lows around the $60,000 support area. This recovery has not occurred in isolation. Across the board, major cryptocurrencies are posting gains, with Ethereum, Solana, and various altcoins mirroring Bitcoin's upward momentum. The total crypto market capitalization has surged, erasing recent losses and injecting fresh optimism into an ecosystem that had begun to feel the weight of prolonged sideways trading and macroeconomic pressures. What we're witnessing is a classic bullish resurgence, driven by a confluence of on-chain signals, institutional activity, and shifting sentiment that suggests the bears may have exhausted their influence for now. At the heart of this shockwave is a critical technical and on-chain development that has captured the attention of analysts worldwide. CryptoQuant's widely followed Bitcoin bull-bear cycle indicator has turned green for the first time since March 2023. This is no minor fluctuation. Historically, this indicator has served as a powerful regime change signal, marking the transition out of bearish territory into an early bull phase. When it previously flipped green, it often preceded significant market recoveries and sustained uptrends. According to analysts at CryptoQuant, including insights from their on-chain experts, this shift indicates that the worst of the corrective phase may be behind us, with the market structure beginning to heal and favor buyers. The indicator's movement into the early bull zone suggests improving momentum across multiple metrics, from holder behavior to capital flows, painting a picture of renewed conviction among participants. To understand the depth of this development, it's essential to contextualize Bitcoin's recent price action. Just months ago, the asset faced intense pressure, dipping toward key support levels amid broader economic concerns, including inflation data and geopolitical tensions. Yet, Bitcoin not only held firm but has now staged an impressive comeback, testing resistance near $82,000 while maintaining positions above critical moving averages. This rebound represents roughly a 25 to 35% recovery from its February lows, demonstrating the underlying strength of the Bitcoin network and its growing appeal as a store of value. Short-term holders who entered during the dip are now seeing profits, while long-term holders continue to accumulate, reinforcing the HODL culture that has defined Bitcoin's resilience through multiple cycles. One of the most compelling drivers behind this bullish takeover is the continued institutional interest channeled primarily through spot Bitcoin ETFs. Despite some volatility in daily flows, including notable inflows earlier in the period, these vehicles have attracted billions in capital. April saw particularly strong performance, with U.S. spot Bitcoin ETFs pulling in around $244 billion in net inflows, nearly doubling the previous month's figures. BlackRock's iShares Bitcoin Trust led the charge, capturing a dominant share and underscoring Wall Street's growing embrace of digital assets. Even as some profit-taking occurred on recent price pops, the overall trend points to sustained demand from traditional finance players who view Bitcoin as a strategic allocation rather than a speculative trade. This institutional backing provides a sturdy floor under the market, absorbing sell pressure and fueling the green wave we're seeing today. Delving deeper into the mechanics, the bull-bear indicator's green flip is supported by several underlying on-chain metrics: realized price levels, coin distribution patterns, and exchange reserve trends all align to suggest that selling exhaustion has set in. Whales and sophisticated investors appear to be positioning for higher prices, with accumulation phases evident in wallet data. Meanwhile, retail participation is picking up without the euphoric froth that often signals tops, creating a healthier environment for continued growth. Bitcoin's dominance in the market has stabilized, allowing altcoins to participate in the rally without excessive decoupling, which bodes well for broader ecosystem health. Ethereum, for instance, is benefiting from renewed DeFi activity and staking yields, while Layer 1 and Layer 2 solutions see increased transaction volumes as users return to the network. From a technical analysis perspective, Bitcoin is navigating key resistance levels around $80,000 to $85,000. A decisive breakout above these zones, especially on strong volume, could open the door to $90,000 and potentially challenge all-time highs later in the year. The relative strength index hovers in neutral territory, leaving room for further upside without immediate overbought conditions. Moving averages are beginning to curl upward, and the asset has reclaimed important support bands that historically precede substantial rallies. Chart patterns indicate a potential bull flag resolution or a breakout from a multi-month consolidation, both of which technicians view favorably. However, caution remains warranted. False breakouts have occurred in the past, and traders should monitor for confirmation with sustained closes above resistance. Macroeconomic factors are also playing a pivotal role in this turnaround. While hotter than expected inflation prints and geopolitical uncertainties persist, Bitcoin has once again showcased its digital gold characteristics by shrugging off traditional risk-off pressures. As central banks navigate policy decisions, investors are increasingly turning to scarce assets like Bitcoin for portfolio diversification. The halving cycle dynamics from previous years continue to exert their influence, with reduced new supply entering the market against steady or growing demand. Corporate treasuries, including notable purchases by large entities, add another layer of buying pressure that supports the bullish narrative. This environment contrasts sharply with earlier bear phases where liquidity dried up and fear dominated headlines. Let's explore the broader implications for the cryptocurrency market. When Bitcoin leads with strength, the entire sector tends to follow. Altcoins that underperformed during the consolidation are now catching bids, with many posting double-digit gains in short periods. This rotation is healthy, as it prevents overconcentration and spreads liquidity across projects with real utility. Decentralized finance protocols are seeing TVL increases, NFT marketplaces report higher volumes, and infrastructure tokens benefit from network upgrades and adoption metrics. For investors, this green wave presents opportunities, but also requires disciplined risk management. Diversification across Bitcoin as the core holding, complemented by select altcoins with strong fundamentals, remains a prudent approach. Examining historical parallels adds further weight to the current setup. The last time the bull-bear indicator turned green in March 2023, it marked the beginning of a significant recovery leg that propelled Bitcoin to new heights over subsequent months. While no two cycles are identical and past performance is not indicative of future results, the structural similarities are striking. Improving on-chain health, institutional inflows, and sentiment shifting from skepticism to cautious optimism. Analysts note that exceptions exist, such as the 2022 instance where the signal appeared but broader conditions differed, yet the current context appears more aligned with bullish historical outcomes. This data-driven perspective encourages a measured but positive outlook. On-chain analytics reveal additional bullish undercurrents. Long-term holder supply remains elevated, with coins moving less frequently on exchanges, indicating conviction rather than distribution. Miner revenues and hash rate stability suggest the network is robust, with fewer capitulation events among operators. Funding rates in perpetual futures markets have normalized, reducing the risk of cascading liquidations that plagued previous volatile periods. Open interest is growing steadily without excessive leverage, pointing to organic buying rather than speculative frenzy. These factors collectively reduce downside risks and enhance the probability of sustained upward movement. For retail investors watching from the sidelines, this shockwave serves as a reminder of Bitcoin's enduring appeal. Despite regulatory noise, macroeconomic headwinds, and periodic corrections, the asset continues to attract capital and innovate. Educational resources, secure custody solutions, and user-friendly on-ramps have lowered barriers to entry, allowing more participants to engage responsibly. At CryptoHub, we always emphasize the importance of thorough research, understanding volatility, and avoiding emotional decision-making. Dollar cost averaging into strong positions during consolidations has proven effective across cycles, and the current recovery phase may offer entry points for those who missed earlier dips. Looking ahead, several catalysts could amplify this bullish momentum. Potential regulatory clarity in major jurisdictions, advancements in Bitcoin Layer 2 scaling solutions, and growing corporate adoption narratives are on the horizon. ETF product innovation, including options and additional institutional vehicles, may draw even more capital. Global events, from elections to economic data releases, will undoubtedly influence short-term price action, but the underlying trend appears constructive. Resistance at $85,000 will be a key battleground. A clean break could trigger stop hunts and FOMO buying, accelerating the move higher. Conversely, failure to hold recent gains might lead to retesting of supports around $75,000 to $78,000, which would likely be viewed as healthy consolidation rather than a trend reversal. It's also worth noting the role of community and sentiment in sustaining this rally. Social media platforms, forums, and influencer discussions are buzzing with renewed energy, but unlike previous manias, the tone remains grounded. Influential voices in the space highlight data over hype, focusing on metrics like the Puel multiple, MVRV score, and other proven indicators that currently lean bullish. This maturation of market psychology is a positive evolution, potentially leading to more sustainable growth phases with fewer extreme drawdowns. Investors are advised to filter noise and concentrate on verifiable developments. Zooming out to the multi-year picture, Bitcoin's journey from its early days as an experimental digital currency to a multi-trillion-dollar asset class underscores its transformative potential. Each cycle brings greater legitimacy, wider acceptance, and deeper integration with traditional finance. The current shockwave fits neatly into this progression, representing another step toward mainstream recognition. For those building long-term portfolios, Bitcoin's fixed supply of 21 million coins, combined with halvings that reduce issuance, creates a compelling scarcity thesis amplified by rising demand. This dynamic has rewarded patient participants handsomely in the past and may continue to do so. However, no analysis would be complete without acknowledging risks. Geopolitical developments, unexpected regulatory shifts, or sharper than anticipated economic slowdowns could introduce volatility. Leverage remains a double-edged sword in crypto, and overexposure during rallies has led to painful lessons for many. Prudent position sizing, stop-loss strategies where appropriate, and maintaining cash reserves for opportunities are essential practices. At Crypto Hub, our goal is to equip viewers with balanced perspectives that empower informed decisions rather than speculative gambles. As the market digests this latest green surge, attention will turn to upcoming economic indicators, ETF flow reports, and on-chain developments for confirmation of the bull thesis. Bitcoin's ability to hold above $78,000 to $80,000 in the face of any pullback attempts will be telling. Should the bulls maintain control, we could see accelerated price discovery in the coming quarters, potentially targeting levels that seemed ambitious just weeks ago. The shockwave is real, the momentum is building, and the crypto market is once again reminding us of its capacity for rapid, profound shifts. In summary, the bulls have taken decisive control following this Bitcoin shockwave, propelling the market into green territory with strong underlying signals supporting further upside. From the pivotal bull-bear indicator flip to robust institutional flows and technical breakouts, the evidence points toward a recovering and potentially expansive phase for digital assets. Stay vigilant, continue your due diligence, and position yourself thoughtfully in this evolving landscape. This has been a comprehensive update from Crypto Hub. Thank you for joining us, and we'll continue delivering the most relevant crypto insights to keep you ahead of the curve. Until next time, stay informed and trade responsibly.